Welcome to Trading Lounge and the US stocks for Thursday. And each Thursday we're going to cover Alibaba, Goldman Sachs and ExxonMobil. We were going to cover the Bank of America, but Goldman's has got a better form when it comes to the Elliott Wave count. But Morgan's is quite good as well. But now and again we'll check on those other banks. But for the time being, we'll go with Alibaba, Goldman Sachs, and ExxonMobil. Okay, Alibaba. Well, it's a strange name to have, I guess. It's rather a Persian name, or even probably more so Baba. Its code is an Indian name. So Alibaba was one of the two sons, I remember, and Alibaba ran off with the 40 thieves, and I wonder if that's the CCP, the Chinese CCP party. Anyway, we'll yet to see. Right, so I've got wave 3 here, and we're working across major trading level 2 here. So we're looking at wave 3 here and A wave here. And I was looking at this as an A and a B and a C wave up here for wave B, and then down for wave C here. But I could also see how you could look at wave 4 as a triangle pattern, as an A wave, a B, C, D and E here, and then have wave 1 up here and back for wave 2 here. So I'm aware of that, and we'll just keep that in mind. It's not really going to affect the count as such for the time being, so it doesn't really matter. What we are looking for is support on the 200, and then we'll look at a move to the upside from that point. Now, we will be putting trades out for these US stocks and other US stocks probably in the next week or two, once I get settled into the format, but I won't be putting the trades or talking about the trades on the chart. They will just stay on the Trading Lounge site, and we'll manage them in the accounting program there. So from here, if this wave 4 here, or even a wave 2 pullback, if this is wave 1 and wave 2 back to this point here, we'll look at this as wave 1 and 2 here, and we'll just drill into the daily chart here, and I'm looking at this here as 1 and 2 here, and 3 and 4, and up 5 for 1 here. And I can look at this as an A and a B and a C for wave 2 here. I could also put wave 2 here, so I do need to do some work on those. So just I just need to spend time with these things. But this is week 1 of US stocks, and we're doing 3 stocks a day. So in a week or in a couple of weeks, I'll have a better grip on things here. So we're looking for a move up through here. So from wave 2, we're looking for wave 3 to move up, and it appears that we may have wave 1 and 2 in play here already. In some cases, I'll use the 4-hour chart, and we'll also look at the tick chart as well here. So in this case here, we could look, yeah, it does look rather corrective actually to this point here, but then it doesn't leave. I was looking at this here as 1, 2, 3, 4, 5 here, but I can see we've got 1, 2, 3, 4, 5 here for the A wave, the B wave, and the C wave here. So I can put wave 2 here. The problem is I don't see 5 waves up here. But we'll check that out a little bit further. This would, let me just check on this here as well. Yeah, it's possible that this is wave 1 here and 2 here and 3 here and 4 here, and then going up for 5 here as well. So making a new high here for wave 5, and then having an ABC correction for this, and then moving higher from that point. So let's just go to the tick chart now and check on that. This is where I got the 5 waves from here in terms of 1 and 2 here, because this finishes in 5 waves here quite nicely. So 1, 2, 3, 4, and then this move up here for that. Let's go to the tick chart and check this, double check on things. Just a little bit, my problem here is just getting this 5 waves out of this little section here. That's the thing that bothers me. You know, even from this low here, which is probably the low in here, 1, 2, 3, 4, and then 1, 2, 3, 4, 5. Oh, possibly, but then that wave 5 there is rather short compared to this wave 1 to this point here. Anyway, I'll just need to check on that. But if you've got any ideas, send them through. I can quite clearly see 5-wave structure in here. This is the 61.8% retracement level. So we may pull back down to this area first before moving higher here. We don't have to. Let's just check this out here. We can take this as an A and a B and 1, 2, 3, 4, 5 here. 1, 2, 3, 4, 5. This is what I need to get familiar with these stocks, because each stock vibrates slightly differently, and some of them are, you know, quite difficult to count. Or we could look at this as 1, 2, 3, 4, 5 here, ABC here. So what we need to do here in the first instance is just look at where we're heading up here. We're right on the 61.8%, so we're going to spend some time there anyway. If the market found support on 18 here, so between 10 and 20 here, we got the Fibonacci numbers 1, 2, 3, 5 here, and 8 here, so we can just drop this down into this space here. Just darken that up one lot, because that's a minor level and this is a minor level here, and there'll be sub levels between those guys, so I just like to color code them a little bit differently. So we know that this is the 61.8% through here. So if it finds support on 218, then you know that we're going to be going higher from that point, and we probably will as such. Sorry, just double checking. So yeah, if we get on to 18, then we're going to build higher from that point, but just be mindful we can pull down from there. Like I said, this week with the charts and everything, I'm just tuning into everything. So, you know, you're going to be tuning in with me, which is not such a bad thing either. So we can just do that together. And if you've got any ideas, that's great. So just pulling back out of here into the daily chart here. So we're looking at this here. We've got a few things that that need double checking and so on, but otherwise this wave 2 here can also go here as well. In fact, I'll just dull this one out for the time being, and that can leave this as 1 and 2 and 3 and 4 and 5 here. So anyway, we'll do some more work on that. But all in all, what I can say here is that we're bullish, and we have support on this number here, on the major trading level here. So I think that's all pretty good. Let's just do one more check here. These spikes here, just from because this is a CFD platform here, so it's from IG Markets. Not that I'm representing them or sending anybody to them, and I don't get commissions off them, and I'm not recommending them or anybody else. But they're okay. You know, a lot of them in the CFD industry are, I call them bucket shops, which is a term that came out of the 30s. So yeah, we're at the 61.8% here, and this is a 78.6 here, the other side. So we're pretty much, you know, like above that that ratio. So we're looking quite healthy here for this stock. Okay, so the next one we're going to look at is Goldman's. Just find them on my list. So I think we're really quite bullish here to be because I can see that this is the A wave here, and this is the B wave here in 3 waves, not 5 waves. And then we've got 5 waves down here. So, and I'm looking at this being wave 1 and back for wave 2 and mushing up high here. So from far as I can see is that we'll be taking out these tops up here. So I just sort of see this sort of like this really. Let's just check out the monthly chart for a moment. And I'm just shooting the breeze here, so, you know. So going back to the GFC here at yada, 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 208 here. It is a bit difficult to count this up here as 5 waves. We could probably get 3 waves out of this quite comfortably. This is impulsive, this is corrective, this is impulsive, this is corrective, this is impulsive here, and this is corrective. So, you know, it has made a new high above here. We could count this as 1 and 2 here, and 3 here, and 4 here, and 5 here. Obviously, that would be wrong because wave 4 overlaps wave 1 here. So if anybody's got a better count than that, that would be, sometimes you've got to take things with a pinch of salt to a point, unless something is really stupid, you know. So if we looked at this in 5 waves here, then we could look at this as the A wave, the B wave, and the C wave coming into here at 61.8%. So we're pretty much spot on the money here, really, as a 5 wave move up here, and then a corrective wave back at this point. So that's what I'm kind of thinking for the time being here. Yeah, so we'll just see how we travel here. But, you know, making money, what we do is we just get ourselves within a structure that we actually understand and we can work. So we don't have to understand everything. We just need to understand our environment where we're trading. And, you know, this using Elliott Wave is not really about trading on a 5-minute chart or a 4-hour chart or any of those sorts of things. It's more about choosing the degree of structure that you want to trade and then create your trading plan within that particular structure. That's a much safer way to go because, you know, when markets, you know, if you're looking, as an example, if you're looking at wave 1 here and 2 here and 3 here, 4 here and 5 here, don't forget that you might trade that structure. Then that means that you'll need to leave the stop way out of the way here. But if you're working inside this structure, let's just say that this is an intermediate structure here, and then the minor structure would be 1, 2, 3, 4, 5 here. So if you're trading minor degrees here, then you're going to have to, you know, look after that 61.8% drop. Then that's a lot to take off your trade. You know, you need to manage that in various ways, of course, or you might be trading just that inside that structure. So, you know, because of the retracements and the targets and so on, you need to first of all choose which degree of structure that you're going to be in, and then you build out from that point. Okay, let's go in to have a look at, this is the weekly chart. We're going to go into the daily chart here. So I was looking at like this here. I know that when you look at this particular structure with the Bank of America and the other ones, it's very squashed up and it doesn't really have any form. But I have to say, looking at this here, we have a nice impulse wave of 1 and 2 here, and 3 and 4 and 5 coming into play here. So this is corrective here. It will be confirmed as corrective when this top gets taken out here. Then that is confirmed as a 3-wave structure. Otherwise we could be down for 1, back for 2, down for 1, back for 2, and then coming down from that point. Just go to the 4-hour chart here for the time being. So yeah, I was kind of looking at like this a little bit here in terms of 1 and 2 here, 3, 4 and 5. I can't see a problem with that. I can't see a problem with this ABC correction here. And now we're starting to impulse to the upside here. So as I mentioned, once we take out these tops here, then that confirms that we're in, that is corrective, and that we'll be taking out that top there. So taking out that top there confirms that we'll get to 200 up here, which is a major level, and then we need to, you know, take a look at that particular structure and so on for that particular point. So I'll just leave that at that for the time being. And like I said, any trades that we put on these will be on TradingLounge website, and I won't be looking at them on here. So the other one is ExxonMobil. Just got myself a new watch list, so I've got to sort that out a bit. Still a lot of details to go here. Let me just pull out here a bit. Let me just see what I've done here. You can be witness to all my mistakes. Right, so yeah, I've got two counts for this. So, and I'm just tuning in. So from the top up here, we could look at it as an A wave here, a B wave here, and then 5 waves down here. And I know that wave 4 is a bit dodgy here, as 1 and 2 and 3 and 4 and 5 here. This works well as an A and a B and a C wave here for wave 2. And then we would look at wave 1 and 2 and 3 and 4 back to the 50 area here, and then down for 5 of 3 and 4 and 5 here of C. So that's one way to look at it. And if I go to not quite the daily chart, I want to go to this chart here. And this is another way I was looking at it. So from the top over here, from the high point up here, we're looking at this coming down for the A wave here. And then we look at this here as the A wave here, and then an A and a B wave here, and a C wave back up here. That doesn't work quite well in there. I have to readjust that. But my main point here, it wasn't really about all of this, which I need to come and resolve. I can see where I've made a mistake there, but I can see how I can rework that. That's cool. But what I was thinking here, and don't worry about that spike, it's just from the CFD platform. But my main point here was counting all of this differently here. So I was thinking that possibly we could look at this as wave 1 here and 2 here and 3 here, and then just look at this here as a triangle pattern through here for this wave 4 and wave 5 here, because one of the things about Elliott Wave and extensions in waves is that with commodities, and you've got to say that this is a commodity stock, is that the extensions can quite easily and very often happen in the 5th wave rather than the 3rd wave. So it's quite possible that this count can come into play here. And in that case, then all we need to do to confirm this really is find support on the 50 here. And finding support on the 50 here is not difficult. This spike is not real, but basically we'll come up, we would get the classic trading levels pattern occurring across this level here. And then we would move up from that point, and we'll take out those highs there. So I've got two counts going, one that's going to fail at the 50 and one that will stick to it a little bit and then eventually become support and then move up from that point. I need to melt this over a lot more, all of these and the larger patterns and so on. But this 50 will become a line in the sand for us in this instance here. So let's just go to a 4-hour chart for a moment. So one way, the bearish count here would be that we can count this up as 1 and 2 and 3 and 4 and 5 here. And I may have to lift this all a degree of structure up. So this can all be lifted up 1 degree of structure. I should have done that, but it doesn't matter. We just all we need to do is count to 5. So 1, 2, 3, 4 and 5 here for wave A here, then an A and a B and a C here for wave B, and then going up here for wave C here, and then failing. So this is taking out the B wave here, so that's okay now. So we can pretty much from that top there, didn't quite get it, but anyway, we should see this push up further now for this, unless this B wave's going to get bigger and have an A and a B and a C. I don't think so. So taking out these tops here is confirming that this is an A and a B and a C wave here. And if it's taking this top out here, that means it's going to take this top out here. And if it's going to take that top out there, well, then we're going to get some sort of equality between this one here and this one here. So this is a trade that will take us up to $50 here. And then we just, because we can look at this, as I just mentioned, in a bullish note, and we can also look at it in a bearish note, but at the same time, we need to trade within the environment that we understand. And we understand that this is in 5 waves. So after 5 waves, we get a correction, and then we'll get another 5 waves. So that's our environment. So we can get to here, and then we just need to be patient, and we just wait at that particular point, and we go fit, do something else, and then we just wait to see if we get support on this level here. So that's what we'll do, and that's that at this. That's all I've got at this stage for all of this. Alrighty, thanks for tuning in. Cheers.